Hi, this is Scott CPA again. Today we're talking about wage garnishments and wage levy. Welcome back, but before we begin, I want to draw your attention to the two buttons on my blog. Click here for a free tax relief consultation, or click here to view my free tax resource library. Back to the topic of the day, wage garnishments and wage levy. First of all, wage garnishment is a wage levy. They're just two different terms for the same subject. Sometimes people get confused as to what these mean, but they really are the same thing. A levy is a legal seizure of your property to satisfy a tax debt. Levies are different from tax liens. A tax lien is a legal claim recorded or noticed against your property to secure a payment of a tax debt. A tax levy actually takes the property or wages to satisfy the debt. When you get a tax levy on your wages, you have really ignored the many IRS notices that have been sent to you in the mail, or simply not responded the way the IRS wants. The IRS says you have tax penalties and interest due to them. They want their money. You have not responded, so they're taking their money from your wages. They're tired of messing around with you. The order of things is like this. The IRS has sent you a notice of demand for payment, better known as a tax bill. Second, you neglected or refused to pay the tax bill. Typically, these things are about 30 days apart. And finally, the IRS sent you a final notice of intent to levy and notice of your right to a hearing, which is the actual levy notice, at least 30 days before they do the levy. If you don't pay your taxes or make arrangements with the IRS to settle the debt, and the IRS determines a levy is the best way to collect, they will issue a levy. They may levy your bank accounts, your home, your personal property, and of course your wages. Wages in your bank accounts are the easiest for them to get their hands on. It's money, it's readily available, and they just take it. Be careful to not get a levy. Okay, now that you have a levy, how do you get it removed? The IRS will release the levy if they determine, one, you pay the amount you owe already. Number two, the time period for collection has ended or expired before the levy is issued. This would be known as the expiration of a statute of limitations. Releasing the levy will help you pay your taxes. Many times a levy can inhibit your business and therefore your ability to pay. So you can negotiate something here. Next, you enter into an installment agreement or an offer in compromise and negotiate the release of the levy. Or the levy creates an economic hardship, which means that the IRS determines the levy prevents you from meeting your basic, reasonable, in their opinion, living expenses. This is a long process where you've got to disclose a lot of your bills, and compared to what the national standards would be for living costs. Or finally, the value of the property is simply more than the amount owed, and the levy will not hurt their ability to collect the amount owed. To get a tax levy release or prevent a tax levy, you should hire a qualified tax problem specialist. We have experience and strategies in getting tax releases and negotiating with the IRS to get you the lowest amount that you have to pay. My contact information is below. If you have this problem or know someone with this problem, please share this video or contact me. Until next time, I look forward to hearing from you. Thanks again.